All right, guys. We're getting down to the wire here on a critical Bitcoin decision time. Um, I'm sure we all know of this pattern shown on screen that floats around online. That I would say most people are expecting. With there's good merit to expect this. We will have to wait and see if this pattern plays out, which I will go over today. Ultimately, we have to take out this low down here, all the buy side liquidity. At 107, we'll just call it 107K. If that low gets swept, the count you see here becomes valid. Now, if you watch my previous video, I go over why I don't like this count. But first, before we do that, let's just dive into what you would be expecting out of this. In both the bearish and the bullish case, we will be heading to new all-time highs either way. It's the only two scenarios on the chart at the moment that make any sense. So basically here we have a large ending contracting diagonal. Very questionable, which I'll go over why. But first, from the ultimate high, we can come down in one of two ways. Either as our first leg being a W or an A, and our second leg being a B or an X. Basically, the only difference is you look for this 5-wave contracting pattern for the A, and if it's a W, you basically just look for a string of 3-wave moves. Including into the B, you're looking for some type of 3-wave move configuration. So where does that leave us now? We need to come down in either a 3-wave move or a 5-wave move. So either as an ABC, which would create the double zigzag, or a 5-wave move, which would create the ABC. What one do we get? We do not know yet. Currently, in this current most recent move down, if we go on to the 4-hour, you can count this as a 5-wave completed structure. Now, what comes after that 5-wave structure, which would be your A here? You'd be looking for a 3-wave retracement into your B. Followed by a 5-wave impulse into your C. Ultimately, if we toggle on our trend-based fib extensions from our W or A to our X to B, our 1-to-1 is sitting at around 101,000. And just for sake, let's say this turns into an ABC. The B ends somewhere around this area. We would be looking for this target box as well for the C. Now, alternatively, this could turn into a C in the case of the ABC to the downside. In that case, instead of your A being finished here, you would have your 2. Then you'd expect a strong 3, 4, and 5. basically leading to the same areas. The bear count is expecting the exact same thing. You got your leg down, you're looking for your retracement leg, and you're looking for one more leg down in both scenarios. When is this scenario invalid, both of these? If you take out this high here at X at 118K. If 118K is swept, this scenario is no longer valid. Now let me just touch on again briefly why I don't like this scenario. Mainly because it's the most expected. I can see people talking about it online. It is the main expected bearish scenario. It's very easy to spot if you're just looking at it from a price wave, price movement standpoint. There's some very serious issues with this count, mainly being, let me adjust the color here, mainly being the size of this wave 1 versus the rest of the finishing structure. This wave 1 is massive. Not only do you have a very large wave 1 into the extending or finishing contracting diagonal, you also have a wave 5 that undershoots the trend line. So you don't get something that actually respects the bounds of the trend lines. Now obviously some people can say this is a sign of weakness, which evidently it was. The fifth wave didn't come up to the top of the trend line because it was so weak and already losing momentum. Sure, you can say that, as I was also expecting a move down, just in a different way. Now here's the main key here of difference with this count. Our wave 5 up here in this scenario was already part of a correction, evidently based on what followed, but more evidently based on, if we look at our on balance volume. I went over this in another video. Ultimately, right here, the peak of our wave 3 was the peak of our volume in this entire uptrend, OBV to be more specific. Ultimately, the next high was very clearly corrective in nature, and I wouldn't actually expect it to be part of an ongoing impulse. Now you have to remember, in Elliot Wave terms, a leading contracting diagonal and a wave 1 is considered an impulse. You would want to see that fifth wave actually finish and be the technical top on OBV, on our volume indicator, but it wasn't. So what does that lead? It leads me to believe, what does that lead to rather? It leads me to believe our wave 3 in this count here was actually our technical top, and we're already in the middle of a correction. Let's swap over to what I mean here. Ultimately, remove some of this clutter. Ultimately, this is what I'm referring to. I have a 1, 2, 3, 4, 5. We can count a clear 5-wave structure here. Overlay your pattern, and it's perfectly valid. Where does the wave 4 come to? wicks right into the 382. It looks really nice, like I said. So here we have a impulse into our one that actually completes at the high in confluence with our OBV. Now, partly why I was convinced the next rise to actually take out the high was just a part of a correction, in this case an expanded flat, where we do a 3, 3, 5 in a C, was because OBV has already begun its correction process at that time. Now, if we just draw a trend line down through here, we can notice when price reached the bottom of this proposed wave A, OBV has already dramatically dropped off. And we can also notice once price rose to the high of this wave B in this expanded flat, we can notice there was no increase in real buying volume on our OBV indicator. What that indicated at the time is that the B, or this high in price action, was actually already part of a correction. It wasn't the finishing structure of an impulse in the leading contracting diagonal pattern that I just went over in the first half of this video. Now, also, if you go back in time, I will allow you to do this yourself on your own chart. Pull up the OBV indicator on the daily time frame. If you go back in time, since Bitcoin has been at 15,000 rather, there's no time you can find where OBV begins to correct on the daily time frame in a large downtrend and has a breakout from that downtrend and fails to make all-time highs. This has never happened. It has a 100% hit rate, and we are actually expecting Bitcoin to take out all-time highs before taking out the $107,000 low because of this. Here I can just show you a quick example. Let's see, this little correction phase here, you can see our technical top was, was right here around the wave 3 high. If we drew a trend line down to where it broke out on the daily time frame, it led to a new increase not only in OBV but a new increase in price past previous all-time high. You can go back in the chart's history. This happens repeatedly over and over again. Every correction, it's actually one of the key indicators that goes with Elliot Wave to help you find technical tops. Another reason why this top here at 124,500, in this case our B wave, part of the expanded flat, was not actually a technical top. It was a corrective high. It is not part of an impulse. This is what gives me the conviction that we will not take out $107,000 low before we trend to 124,000. I do think down here is a very strong long opportunity, and I do think we will be targeting new all-time highs to come in the fashion of this wave 3 here. Now let's turn off OBV really quickly, and we'll go down to the 4 hour. Actually, let's go quick jump back to the daily. Now basically just glancing at this chart without really going into details counting it, you can see a clear 5-wave structure here. If you jump down to 4 hour, it is possible to count this as an impulse. Now what came after the impulse? We had a clear 5-wave move down here to a B into another 5-wave move. Now it's a little tricky down here because some exchanges have taken the low, some haven't. That's why when we pop out to the daily, if you really just take a quick glance at the daily looks like, you can see it's a nice 3-wave pattern here. If you really had to guess, you would like to see one more low if it was a 5-wave pattern. And technically you can count it as a 5-wave. If you go down, you could say the 2's here, and there's your 5-wave pattern. But just from a quick glance, just like on the daily time frame over here, quick glance, you can see it is a 5-wave pattern. You can confuse yourself by going into too much details, but you're looking for the right look in Elliott waves. And Elliott waves shines best on the daily time frame. So we have a nice clear 3-wave pattern here. What's a 3-wave pattern? If we're looking for a wave 2, we're either looking for a WXY or an ABC. Either way, I don't think it really matters too much unless you're going into the fine gritty details down here on the lower time frames. In this case, we will leave it at a ABC. And at this current point in time, we do have our large 1-2 complete. Mind you, if we go back and further in time, this is within a very, very large wave 3 on the macro time frame. Starting from 15K lows, we came up in a 1-2, expanded in a strong 3, consolidated for a very long 4, and based on further current price action, we can make the assumption that we are expanding into a large extended 5th wave due to the size of this next impulse that came. That can only be viewed as a wave 5 or a wave 1. Since price came out and took the high of this high again, pretty much 100% confirmation that is a new wave 1. And we pulled back deeply to confirm a nice wave 2. What happens after a 1-2 structure? We're looking for a big 3. In this case, we had our 1 of the 3 already complete. Also, our 2 is already complete. Now, if we do check our trend-based fib time, measure the time of this wave 2 versus the wave 1, we can see, let's toggle on the 0.5, we can see that it ended after the 382, right around the 0.5 fib time. We'll call it 0.5 because it's closer in this instance, meaning it was 50% the time taken to correct versus the time taken it did to create the impulse, which is perfectly normal here. Especially, and keep in mind, especially when you are in the middle of a large wave 3, looking back on the weekly time frame, you're basically just looking for a straight up line. And that's why this wave 2 here did not correct very deeply, because it is in the middle of a wave 3. You have to remember the context here. We are expecting the wave 3. So in this case, we also got a, due to Elliott Wave's rule of alternation, we have a nice little alternating deep structure here on the next wave 1-2 to come, which is actually just the beginnings of the large 1-3 to unfold. So if I just draw this out really quick, what you could expect basically you'll have your 1, 2, 3, 4, 5, which will be another 1 because you need 5 waves inside of your third wave. So then you will have a 1, another very shallow 2, because remember the context again, at this point we are in the middle of the 3 of the 3. The wave 2s will become very short and condensed, and price will begin to accelerate rapidly to the upside. So you will have your 1, 2, then a very large expanding 3, 4, 5 to ultimately get you to that wave 3 target box, in this case around 185,000. Ultimately, I stand by this analysis, and I hope what I went over with you today gives you conviction in your future outlooks. No financial advice. I hope I explained the differences between these two counts. I hope I explained why this count, the leading contracting diagonal, is not a strong probability. Again, because of the size of this wave 1 mainly, and the finishing structure in the 5th that did not reach the trend line, and also clearly technically showed us that it was part of a correction, not the end of an impulse. Thank you guys for tuning in.